Welcome back to the channel. My name's Max. My channel's name is The Covered Collar. Let's get in the middle of this Ulty, ULTY strategy change. I have to say ULTY now because we're in a world with two Ultys. We have ULTI from Rex Shares and ULTY from YieldMax. But tonight we're talking about ULTY. All right, so they did a strategy change. Let's look at the price action. Well, the price action's lousy. This is the first time ULTY has been under the 200-day moving average since. It's the first time it's closed under the 200-day moving average since February 27th. You know, if it stays under the 200-day moving average, that's not a great sign. It's kind of the sign of a bear market. The last time it did, it dropped from $4 to $3.15, and that's the split adjusted price. That includes the dividends. So it bled off 85 cents on $4. That's about a fourth of its value. So if it were to do that again this time, it would go from 4 to 3. So I'm not predicting that, but in any event, we want to take back that 200-day moving average. I think one problem is it's highly correlated with Bitcoin. They have about half their portfolios Bitcoin or Bitcoin related. So that's so what they're trying to do, and this is according to the Wolf Financial Spaces on Wednesday. They're trying to add in more blue chip mega caps, and that's what they've done. They bought some blue chip mega caps. They've also switched their option strategy. So I'm going to concentrate on their option strategy. But the one thing that would really help ULTY more than any option strategy change, more than any portfolio change, would be for this to go back over the 200-day moving average. Alt-Y purposely picks the stocks with the highest IV. Stocks with really high IV lately in this market tend to be Bitcoin related or AI or quantum computing, but it's all tied in. They're all fishing out of the same pond, so to speak. All right, so let's see what they're trying to do. So I've downloaded the trades and I watched ETF Inspector. Go watch ETF Inspector if you haven't. He keeps track of how much money the trades make and he predicts the dividends. I'm going to concentrate more on the strategy, or entirely on the strategy. So here's what they did. Here's their big buys today. They bought Costco. That's a blue chip mega cap. They bought Circle, not a blue chip, not a mega cap, but anyway, they added Circle. But they bought, as far as blue chips go, they bought Costco, Salesforce, Facebook, and Nvidia. So, and I've taken a look at the trades. First of all, on the Costco trade. So they, whenever something's highlighted in green, it's the new strategy. Now they're also doing a new option strategy, which is a kind of an exotic strategy. Let's just take a look at it on Costco. But Costco is definitely the new strategy. They have several different strategies going in here. This is an option nerd's dream, all the stuff they're doing. But I mean, they still need the market to go up. They're all bullish positions. Market goes up, they do better. Okay, so here's the Costco trade. It's actually up $130,000 right now. I mean, this is the trade right here. So this is I'm calling this a 3-leg collar. It's still a collar. They've been doing collars for a long time. They're just selling a put to help pay for the out of the money put they're buying. Not really so much to help pay for it. It also offsets some of the drag from this put. When you buy an option, your portfolio suffers drag because the option has theta decay. Well, they're selling another put to offset the put drag. And we'll see if it works. Like I say, they still need the market to go up, or at least not be in a free fall, like it has been, like Bitcoin has been for about a month. The Bitcoin's off more than 20% in the past month. So, all right, so that's their trade. We'll keep an eye on that one. That's their Costco trade. Now let's look at the next trade down the line. Now, as far as Circle, they put on the old tired strategy. That's why it's in yellow, just a full collar. So they don't have all new strategies on, but I've went ahead and color coded the entire portfolio. We'll look at that in a second. But as far as the new trades go, The next biggie they bought was Salesforce. This is in green because this is also the three-leg collar. I'm calling it sell a call, sell a put, and then buy a further out of the money put twice. And that's exactly what they did. That's why you see 3,000, 3,000, and 6,000. 6,000 is buying the out of the money put twice. The 3,000 and 3,000 are selling a call and selling a put. You could also call this a covered strangle, but it's a covered strangle plus stock. And it's a defined risk covered strangle plus stock. So I prefer just calling it a three-leg collar. So anyway, let's take a look at this three-leg collar. Let's take a look at this bad boy. There it is, CRM right there. Now this one's down $610,000 as of the close. Let's take a look at this bad boy. Yep. Sell a call, sell a put, and buy a further out of the money put twice. Further out of the money put, capture loss, but this put that you sell that's a little bit higher up is offsetting large parts of the time decay of this put. The idea is you'll have less put drag. We'll see how it works. So there's that trade. Now let's go look at the next trade. Okay, and then in Meta, I painted this red because green is the new strategy, yellow is the old strategy, and red is even another new strategy, but I wanted to distinguish it. Now, this thing's really exotic. Like I say, this is an option lover's dream, but I mean, you know, the proof's in the pudding. We'll see how they work and stuff, but I like evaluating these trades for sure. All right, so this thing, I'm calling this thing a lightning condor. This thing is... Okay, this is a four-leg overlay plus stock. They have 125,000 shares of Facebook, Meta, whatever you want to call it. And then they sold a collar on. They sold a condor on top of that, an iron condor. So they still have the sell call and sell put, but then they're buying a further out of the money put, which uncaps part of the upside. I mean, I like that. But then they're also buying a further out of the money put, and they're only buying it once. They aren't doubling up on the put. So it's not a collar formation anymore. This has unlimited risk on the downside and unlimited profit potential on the upside. But what they've done is they've created a place here in the middle between 600 and 635. They get the same upside as stock or downside if it should drop, but they get an extra, they sold put spreads and they sold call spreads, so they bring in money. And, as long as it stays between 600 and 635, they're fine. If it goes above 635, they're fine too, even though they might lose a little bit of money on this because they have stock at the end of the day. So this is what did I call this? A lightning condor. I mean, so anyway, we'll paint lightning condors in red. That's from now on, red's the color of lightning condor if they keep doing those trades. All right. And then they also did Nvidia. This is our last mega cap tech stock. And you can see here, sell call, sell put, and then buy double the amount of out of the money puts. This is a three-leg collar strategy. So let's go back to option strat and let's open up this trade. Nvidia, the three-leg collar strategy. All right, so that's pretty much standard. You could also call it a lightning collar, or I mean, it has elements of a lightning spread because when you sell a put and then buy another put, that's a lightning spread, but they buy the other put twice. So it's a collared lightning spread. I guess we could call it a collared lightning spread also. But then on top of that, they have stock plus a short call. So that's a covered call. It's like they're running a covered call at the same time with this is, it's a three-leg, just call it a three-leg collar. They have limited loss on the downside. They have potential for upside to a point. If it goes over 197, they're capped out. And the entire trade can be put on for a credit. All right, so let's look at the positions and let's see what else we have to catch up on. So that's the new positions. This is the trade column here on the left. Over here on the right, I put these are the actual positions. So lots of these positions are existing, and it looks like they're in the process of rolling them to new trades, to new strategies or whatever. But if it's yellow, it's the old strategy, essentially. Affirm is the old strategy. It's a caller. Astera is the old strategy. It's a caller. Buy stock, sell call, buy put. That's a caller. But Celsius Holding, they have on the new strategy here. They have, plenty of shares, 110,000 shares, or I guess 1.1 million. And then they sold a call, sold a put, and then they bought twice as many out of the money puts. So that's the Celsius position. They have cap downside on that. It's a 3-leg caller. Let's just call it what it is. All right. Then on Cypher, they have the old strategy, which is just a regular caller. They have on Circle, they have the old strategy, which is just a regular caller. I couldn't really tell what they're doing on Coinbase. I mean, to tell you the truth, I didn't put any color to it. I think they're transitioning, let's just say. But anyway, I'll keep on track. I'll keep on top of it. By tomorrow, we'll should know a lot more. But I'll let you know tomorrow night's show what Coinbase is doing. All right. On CoreWeave, that is, well, I put it in green, but I put it in dark green because it's even still a different strategy. Also that it goes down here also. Okay. On CoreWeave, yes, that is, I don't know. I'll have to get back with you on CoreWeave. I knew a little while ago. That's why I put it in the different color to track what it was. I put it up here. That's right. Okay. This is a really interesting trade, actually. And that's why I went ahead and I couldn't tell what it was. So I had to put it in here. And it's actually a really interesting trade. I actually really like this trade. They're doing a covered call spread on top. They have stock, plus they sold a covered call, and they bought a further out of the money call to partially uncapped their upside. Okay, so that's a solid strategy. So, and then it's a covered call spread with defined risk. And then they cap their downside by buying a put. So, it's a covered call spread caller, let's just call it. Because it's a covered call spread and it's collarized. All right. So, let's see what else is on deck. Costco's green. That's the new strategy. That is the 3-leg caller. Iron is yellow. That's the old strategy. That is a conventional caller, a 2-leg caller, let's just call it. Lululemon is a 3-leg caller. That's the new strategy. So we'll see how that goes. Now, this one's in red. Oh, yeah, but that's Meta. I put it in red because it's the one with it's the covered condor lightning spread or whatever. It's the 4-leg overlay. It's basically an iron condor on top of stock. So we'll see how that does. But the important thing to remember is you want to stay between the short strikes, which is 635 and 600. As long as Meta stays between those two prices, they maximize the profit on the option overlay part of it. But they also have stock, so they just want it to go as high as possible. So really the optimum price would be 635 or 1,000. I mean, or a lot higher. Because they have a flat spot between 635 and 640. Let me go back and show this. This Meta trade is intense. Okay, let me show you what I mean. So, of course, you want the option overlay not to cost you any money. So as long as you don't go past 600 or past 635, the option overlay realizes the entire $300,000 credit. That's good. But the reason I say the best price for it to go to is right up to 635 or way past it. If it goes way past it, it keeps earning money. But and within reason, you just love this to go to 635 and stop, or go to about 700 or something. But in any event, we'll see what happens. All right, so let's go back here. Nvidia is the new strategy. Oklo, Palantir, Hood, Rocket Lab is the old strategy. CRM, Salesforce is the new strategy. Did we look at that? I forgot if we looked at CRM. We did. I think we did. Anyway, it's the new strategy. The three-leg collar. SoundHound is SoundHound. I put the wrong color on. My apologies. SoundHound is actually the old strategy, and Symbotic is the old strategy too. Okay, so let's see what stock index futures are doing right now. It's about 11:47 here in the Central Time Zone. I'm worried about the market. I have been. That's why I bought Salty today. And by the market, I mean more like I'm worried about Bitcoin. And I'm worried about Bitcoin dragging the market down. All right, the ES is pretty much going sideways from the close. So we'll see what happens in the morning. Let's see what Bitcoin futures are doing. Well, that's not a good look. That is not a good look at all. You know, Bitcoin futures, you know, they had a double bottom at 99 where buyers were interested. They shot underneath it today, came back up and failed, and now they're making new lows. That's just all that has all the hallmarks of a bad looking market. So we'll see. We'll see. It just looks to me like it may get worse before it gets better. I'm not hoping for that, but we'll see. All right, I'll be back tomorrow with the skinny on ULTY and what they're doing. Let's look. One other thing. This is my chart where I track the ETFs I really like: blocks, ULTY, QLDY, LFGY, kind of the diversified. I call it the diversified divas. But you can see right here on a total return basis, and I started this the Friday before last whenever ULTI and K yield came out, so we could track them all. I started them at the same place. Right now, the worst performing one is ULTI. The second worst performing one is blocks. The third worst performing one on a total return basis is LFGY. ULTY is the fourth worst performing one. And then we have K yield performing a little better. That's a good job, K yield. Then we have WPay down 8%, not doing too bad. GPTY also down 8%. And then on the good list, QLDY doing a great job, only down 4%. And of course, in that same time, the NASDAQ's down 3.2%. And the SPY is actually holding up better than the other indexes. We'll keep an eye on all this stuff tomorrow, and I will see you in the morning. All right. Later.